SoFi could literally double when the Fed cuts rates on September 16th, but there's an AI infrastructure stock that just posted 625% revenue growth that nobody is talking about. In a space company that could make Starlink look like dial-up internet. I just spent 6 hours analyzing Fed data and found that 3 stocks in exploding sectors that are perfectly positioned for what's coming. Markets are pricing in an 87% probability for the first rate cut since 2023, and these 3 sectors, fintech, AI infrastructure, and space, are about to go absolutely nuclear. But here's the thing, you need a position before September 16th because after that announcement, these moves happen in hours, not days. But as always, what's up everybody? Welcome back to the channel. If you're new here, I find the stocks that are about to make serious moves in sectors that are literally reshaping the economy. And today, we're talking about 3 explosive sectors that are converging with the Fed's rate cut cycle to create once-in-a-decade opportunities. We're covering 3 things. First, why September 16th could trigger the biggest sector rotation of 2025. Second, the 3 specific stocks, SoFi and Fintech, Nebius and AI infrastructure, and AST SpaceMobile and the space economy that have mathematical reasons to explode when rates drop. And lastly, why these 3 sectors are experiencing unprecedented growth that most investors are completely missing. But before we dive in, if you like what you see, smash that like button. If you want me to keep finding some of these explosive sector plays before they actually go mainstream, and of course subscribe because these sectors are pretty much just getting started. So let's start with why September 16th isn't just the normal Fed meeting, right? It's the catalyst that could trigger the biggest sector rotation since COVID, and the numbers I'm about to show you will change how you think about these growth stocks forever. So July's job report was an absolute disaster. We added only 73,000 jobs, and I promise you that's not a typo. 73,000. Previous months were revised down by 258,000 jobs. The 3-month average job growth has collapsed just 35,000, the worst reading since the pandemic. But here's the insane part. 2 Fed governors already voted to cut rates at the last meeting, Michelle Bowman and Christopher Waller. They were wanting immediate cuts, right? So this is the first double, they like to call it double descent since 1993. These people see data that we don't, and they're basically screaming, we need to cut now. But of course, power has a final say, unfortunately, right? Markets are pricing in 87% odds of a rate cut that I mentioned before, but here's what people are kind of somewhat missing. When the Fed cuts rates, it doesn't just keep the overall market or even help the overall market is what I meant to say. It creates massive sector rotations. Monies flood out of the bonds and defense stocks and go to high growth sectors that benefit most from cheaper capital. And the 3 sectors we're about to discuss, they're perfectly positioned to capture this exact rotation. Historical data shows that growth stocks delivered returns almost 30 times larger around Fed meetings. And here's why the key is not just the random growth stocks that benefit. You know what I mean? Some of these things are calculated. It's companies and sectors with massive secular trends that tend to get turbocharged by lowering the cost of borrowing, right? And that brings us to 3 sectors that are not just benefiting from the rate cuts, they're actually experiencing fundamental revolutions that most people are not really paying attention to. So let me show you exactly what I mean. Based on the analysis that I found, 3 stocks of the fastest growing sectors on the planet that could absolutely explode the Fed rate cuts. So these aren't typical rate cut plays. These are companies riding massive secular trends that get supercharged by lower rates. And so I'm gonna break it down a little bit. So first up, we have SoFi, right? Everyone's probably most familiar with SoFi. And what I like to tell people, it's kind of like what Robinhood is doing for investing with the younger generation. SoFi is kind of doing that for banking, right? And so this is I feel like a fintech revolution play that could really, double down when rates drop. SoFi is a digital bank that makes money by lending personal loans, student loans, mortgages. When interest rates fall, 2 amazing things happen. First, their cost of funding absolutely collapses, which massively improves their profit margins from day one. And second, the loan demand explodes because guess what? It's much cheaper to borrow when rates are cut, obviously, right? I mean, that goes hand in hand. And so the math around that is every 100 base points of rate cuts should improve SoFi's net interest margin by 150 to 200 base points. That flows straight to the bottom line. And they're already approaching profitability, and rate cuts could push them firmly into the black. But what I think would make SoFi so special is that they just got their bank charter, which means they can now fund loans with deposits instead of expensive wholesale funding, right? So they're growing deposits by 50% year over year, building a funding advantage that gets even more powerful when rates fall. The stock up until, of course, recently was actually down, from its all-time highs dramatically. despite the business fundamentally improving. The average price target that we saw on Wall Street in the past, around $12, things like that. So there's a significant upside. I think as of right now, as the date of this recording, it is August 22nd. SoFi is up 7% today due to the talks that Powell had over at Jackson Hole. I forgot about that. And so he pretty much hinted at rate cuts. And so, because of that, people are running to SoFi, and as they should. But in that environment, when the rates do cut, the target I believe that Wall Street kind of has is absolutely conservative, right? My second pick, Nebius, ticker NBIS. This is the AI infrastructure explosion that's flying under everyone's radar, right? So Nebius builds the GPU clusters and cloud platforms that power AI development. So think of them as the picks and shovels when it comes down to the AI gold rush, right? They serve everyone from major startups to major enterprises like Shopify and, of course, Cloudflare. But I want you guys to kind of hear the numbers of why I like the stock so much. Check this out. So in Q2, the revenue growth was 625% year over year. Like that's absurd, right? 6%. They're guiding for 900 million to 1.1 billion annual run rate by the year end. So because of that, I believe year to date, the stock is up absolutely dramatically. I'll show you guys a picture. I don't have it in front of me, of course, but for some reason, most people haven't really heard of them. And I know, from the side of the rate cuts, Nebius is a pure growth stock trading about 15 times forward sales. So when rates fall, high growth tech companies see multiple expansion because their future cash flows become worth more today. So plus, when it comes to AI companies needed massive capital expenditures for GPU clusters, cheaper debt makes those investments way more attractive, right? So Wall Street's, like I said, their average price target is, I believe, a little bit conservative as well. It's around like at 67.50, and Goldman Sachs actually just upgraded them. So, but here's the thing: they actually spun off from Yandex after everything that's going on with Russia and Ukraine. So most institutional investors are still discovering them, right? So this could be a massive re-rating story that's pretty much unfolding as we speak. And lastly, my third pick is where we get really aggressive. AST SpaceMobile, ticker ASTS. This is one of my favorite space economy plays that I think, could make Starlink pretty nervous, right? ASTS is building the first space-based cellular broadband network, and they're launching satellites that could connect directly to regular smartphones, no special equipment needed. So think global 5G coverage everywhere on Earth. The total addressable market, TAM, it's absolutely insane. We're talking about 5.5 billion people globally still to this day in 2025 lack broadband access. So ASTS has partnerships with major telecom companies covering 2.8 billion potential subscribers. The first commercial satellites launched this year, and early tests are showing speeds comparable to 5G. So here's the Fed angle that kind of wraps everything back in. So when it comes to these space companies, they're incredibly capital intensive, right? Launching satellites costs hundreds of millions of dollars. And of course, when the rates fall, financing for these massive infrastructure projects become way cheaper. So plus, in addition to that, ASTS trades at about 20 times forward sales. So similar to the other hyper growth infrastructure plays, this stock as of right now is up, I believe, 300% within the past 12 months. And the crazy thing is, they're just getting started, right? Wall Street has a consensus price target around $35 to $40. And that's a significant upside from their current levels. And if their technology works as promised, this could be a next $1 trillion infrastructure play, right? So to talk a little bit more as why, these sectors are perfect for the current moment, they're not just rate cut plays, they're riding massive secular trends that are reshaping the entire economy. Digital banking is eating traditional banking alive. Like I said, SoFi is just the modern way to bank. Companies like them, are processing over $100 billion in loans just last year. So traditional banks are losing market share every single quarter to these digital first platforms that offer better rates, faster approvals, and actually deliver decent customer service. In my opinion, looking at it, it's like common sense. I'm 28 years old, and I know other 28-year-old people within that range from, let's call it 25 to like 30, they are going to be more tech savvy than the people who came before them just because we grew up with technology. And naturally, I would want to, work with a bank that was thinking digital first, just because, I can do everything from my phone, my laptop, whatever it may be, right? So it really makes sense. That's the kind of my thesis when it came to Robinhood, and Robinhood is they're doing their thing, to say the least, right? So I love both companies, and I'm excited to see where they go. But the real key that we're still in, I believe, in the early innings of SoFi, right? Only about 15% of banking transactions happen through pure digital platforms. So that number is projected to hit 50% by 2030. Lower rates help accelerate this trend because digital banks can pass on savings faster than traditional banks with their massive overhead. And so to talk about my next one, AI infrastructure, why this is, the rate cuts are important for that industry. Their spending is absolutely crazy, right? Companies spend $50 billion in AI infrastructure in 2024, and that's projected to hit $200 billion by 2027. Every major corporation is trying to build AI capabilities because obviously, it helps save time, it cuts costs, and it actually makes things much faster for them as a business as a whole. So naturally, why wouldn't they, right? But with all that being said, they need massive computing power. And Nebius is perfectly positioned because they focus on specialized AI workloads, not general cloud computing, right? So essentially making their process and they have with AI perform better. And when these rates fall, companies accelerate their AI investments because their financing becomes cheaper, as I mentioned time and time again throughout this video. And so, their cost advantages from their Nordic data centers using green energy, that's becoming a huge competitive moat for them, right? And lastly, when it comes to the space economy, it's projected to be worth $1 trillion by 2040, up from $400 billion today. What most people miss, it's not just about rocket launches anymore. It's about, the space-based infrastructure that enables everything from global internet to climate monitoring. ASTS represents, what's kind of coming within the next phase, using space to solve terrestrial problems. You know what I mean? And so their satellite network could bring internet to rural areas, provide backup for disaster zones, and enable connectivity anywhere on Earth, right? So lower rates make these massive infrastructure projects way more feasible. And as I mentioned, I want you to remember that these aren't just individual stocks. I think they're something that play on the biggest technology shifts happening right now. And when you combine these secular trends with a Fed that's about to cut rates, you get the potential for explosive returns, right? Now, I don't want to say everything is all roses and daisies, things like that, right? I'm not going to stand here and tell you that these are risk-free investments. That's totally not true. As always, not financial advice. Do your own research before you buy anything. Don't just listen to a guy on YouTube. Remember that. But, some things could go wrong, right? For example, when it comes to SoFi, if the economy actually crashes and unemployment spikes, loan defaults will absolutely surge. Absolutely, right? So we're still not consistently profitable as of right now, so they need a decent economy to execute their plan. For Nebius, they're burning cash to build infrastructure. If AI demand plateaus or major competitors like Amazon, Microsoft undercut their pricing because they can do that because they have other ways to make money, Nebius is in trouble. They could absolutely struggle, right? So what they're exposed to geopolitical risk, given their history, there's a lot of things that can go wrong for them, right? And for ASTS, this is the highest risk, but the highest reward play. Their technology is still unproven at scale, and satellite launches can fail, as we see, with SpaceX and other things like that, right? And so the regulatory environment for space-based internet is still evolving. This could be a 0, or of course, could be a 10-bagger. But the thing is, though, every transformative technology goes through this phase. Internet, smartphones, electrical vehicles, they all look risky before they change everything. And the key is position sizing. So just be smart. Don't be an idiot. Don't full port. It's be mindful of those things, right? But let's go ahead and wrap this up. We're potentially 23 days away at the time of this recording from the most significant Fed policy shift in recent years, and it's happening right as 3 massive technological revolutions are hitting their inflection points. So it's like everything's aligning to have that big play, have that big day, let's call it, right? And so the fintech revolution, again, turbocharged by rate cuts, Nebius for the AI infrastructure boom that most people are missing, and of course ASTS for a space economy that could redefine global connectivity. What I love about these picks is they work even if I'm wrong about the timing. SoFi is building a real banking business, Nebius is capturing all the AI wave, and ASTS is solving a real global problem. They're not just Fed bets, they're actual investments, that I would like to say for the future. But remember this, again, it's not financial advice. I am not a financial advisor. These are high-risk growth stocks that could be very volatile. So do your own research and invest what you can afford to lose. But with that being said, I look at that 625% revenue growth of Nebius, SoFi's path to profitability, and ASTS trillion-dollar market opportunity combined with a Fed cut that is, it's set up to me. It just seems like it's the early days of cloud computing or smartphones. I don't know. Maybe I'm being dramatic, but Nonetheless, if this analysis helped you understand these explosive sectors, absolutely crush that like button, subscribe for more hidden gems, and drop a comment for which sector excites you the most. You know, Team Fintech, Team AI infrastructure, or of course, Team Space economy explosion. These 3 stocks are just getting started, and September could be that catalyst that can send things into orbit. See what I did there? But with that being said, I'll be tracking every move, so hit that notification bell. And I will see you guys again soon. Peace.